Hey everybody, K Paso. It's Sunday night. What's today? May 1st, I believe. Let's say May 1st. Just paid my yeah, paid my Georgia taxes last night. Good times, good times. Hey Brad, I was late on Georgia taxes. I thought Georgia taxes were due on May 1st. My wife was worked for a tax firm. What the hell? I said, hey babe, I got a penalty. What's up? And she was, oh yeah, I thought you had till May 1st to pay Georgia taxes too. Brad says markets are making me feel broke. Why? I don't get it. Why make you feel broke? Um, I don't understand. All right, so we got. All right, so we'll just let some people come in here and see what Brad says. Why he's feeling broke because of markets. I mean, S&P 500 is down what 12%, something like that. Year to date, 12%. Jeez, man. After all the run up we've had for the last 15 years. Hey, James, Chicken Charlie. I don't know, man. I got feeling broke after this. Oh my goodness! Wait till you see a real market, a bear market. Don't say how much you're down and how much were you up from 5 years ago. I mean, come on, man. And John, que paso? I mean, these are bear markets have all the time, man. I don't. Anyone who doesn't expect a bear market to happen, I don't know. I'm not saying Brad's saying that. I just bear markets happen. God, let's see if I can't find. Hold on a second. Brad, all right, Brad. So you're down 40%. You're down 40%. What the hell you invested in, man? Holy crap! Brad had 500,000 bucks. He's down 200,000 bucks, which means he's down 40%. I mean, my goodness. Hey, Vaughn, Mike, I feel like I got something on my teeth. Looks like a. Hmm. I did a pulled pork Boston butt in my Ninja Foodie today. That sucker was good. It was good. Tesla. Yeah, is Tesla down that much? Is Tesla down that much, James? Well, I'm going to show you something here real quick. I'm trying to pick out my teeth and barbecue. It's out in the yard. All right, so let's go to Fred. US GDP. Let's see if we can't. I just want to show you guys something on recessions that happens. Let's see if they got them in here. Hold on just a second. Yeah. All right. So let me show you all the recessions. Yeah, I was going to say too, must be ARC funds. I had a bunch of people back when I did videos on Kathy Wood a couple years ago, or I can't remember, and saying, look, man, what comes up goes down. And if people are, I mean, just anything that's that good, it just history will tell you what comes up comes down. Doesn't mean it comes back down to even Steven, but you got to be prepared for some downside. And people are like, oh no, Kathy Wood, she's invested for long. I said, man, I've heard all this. Look, I've been around for so long. I've heard this all before, all of it before. Doesn't mean Kathy Wood's stupid. Doesn't mean she's evil. It just means this happens 1,000 times a Sunday where people say, I'm following the what has done well because what has done well will do well in the future. And that's just you can't think like that in this stuff, man. You just can't. That's why you just got to be spread across the board. In my opinion, buy dividend stocks and just be done with it. All right. So I want to show you guys this because, and dividend stocks by mutual fund too, by the way. I just want to talk about not, I mean, you can buy individual stocks, but I'd be careful. All right. So this is the Fred from the Federal Reserve Board of St. Louis, Federal Reserve Board of St. Louis economic data. You can see, excuse me, geez, all these grays are recessions. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We've had 12 recessions, and I think we're probably in one right now in 70 years. So 12 recessions in 70 years. So we take our trusty calculator. That means basically every 17% of the time we have a recession. 17% of the time we have a recession. how can I say this? Because not really 17% of the time. You see, this is a tiny recession. That's a big one, small, pretty big, small, and average, medium, low. But what I'm saying is, we've been in a recession. We've had a recession 17% of the time going back to 1950. That is not to say 17% of the time we've been in a recession. I want to be clear there. Being in a recession, we haven't not been in a recession for 17% of the time, but we've had recessions 17% of the years, I should say, going back to 1950. Happens all the time, man. I not on Rumble. I try to set up my thing to think about you, Jeremy. I said I'm going to get on Rumble today, and I had a hard time not logging in, but get my Rumble makes you have this video that starts the show, and I hate that. I hate they make you upload this video. It's not really that big of a deal, but that's the problem. They make you upload this video, and I have it someplace in my desktop, and I couldn't find it. So Rumble kind of gives you a pain in the butt. But anyway, so that's we've been in recession a lot, and so yeah, and 12 recessions in 70 years, 100%, man. Hey, we got Northern Captain. Yeah, market timing rarely works. Well, and the question now is to buy what? Growth? Kathy Wood's down 60% last 6 months. That's crazy. 60%. 401k with Fidelity is about down 11% year to date. Thinking about electing 0% and just park the money for a while. This thing is, I mean, look, all right. Hey, Rebecca. Thanks, Kenneth. I know it's a lot. Oh, ask predictions. How do you think the markets will be down for one? Probably shouldn't be longer. Man, I got no idea. Finnegan, I got no idea. And no one has any idea. Bonds down 10%. I want to see if I can't find the JP Morgan thing. Hold on just a second. I wonder if I have JP Morgan average market decline. Here we go. This is good. I'm going to show you something. Thanks, babe. I'm just dying the world tonight. Must have been something I said. All right, here we go. I'm going to show you this. All right, so we're going to go to right here. There's a JP Morgan going back to 1980. Every single year, that's the red. What the most it went down in any given intra-year. Annual returns and intra-year declines. Annual returns and intra-year declines. So let's see. We're going to go down to 2009. 2009, everyone says the market was up. Well, it was down 28% at one point from top to bottom. We're going to go down to right here, 2020, down 34% from top to bottom. 2018, it was down 20% top to bottom. 2015, it was down 12% top to bottom. So, I mean, look at this, man. I mean, here's 1987, it was down 34% top to bottom. Here's, I don't even know what that is, 1991 probably, down 6% top to bottom. Here's 2096, 97, 95, 96, 97, this is 97, 98 right there, down 11% top to bottom. 99 down 12% top to bottom. Wait, that's 95, 96, 97, 98, 99. Yeah, there you go. Look at that. And I mean, you can see that here we are, 2003, down 14% top to bottom. Here we are, 2010, it was down 16% top to bottom. I mean, folks, look, I'm not trying to be an ass, but this stuff happens all the time. Jeez. I mean, it's just bear markets happen every 4.5 years or so. We just haven't had one. And again, a bear market is a 20% decline. And I'll go back to that chart. We haven't had a bear market of any significance. And this right here, 2020, that wasn't it was a bear market, but it was such a short span. There's only 33 days or something like that. It doesn't even count. It doesn't even count. I mean, I don't think it counts. This right here was not 20%. The S&P 500 was not down 20% in 2018. It was down 19.8%. So it's not a true bear market. So we haven't had a bear market since right here, 2009. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, basically 12 and a half years so far without a true bear market. The worst we've had was this right here, was just a blink of an eye. And that's because of stupid reaction to coronavirus. All right. This was not a bear market. This is Q4 2018. So we've had times where you're down 19, 16, 10, 12, 11, 13, 34, 20, all in the last 12 years when we had no true bear markets to speak of. I don't know what to tell you, man. If you're not expecting this, then you should be so far away from the markets that I don't know what to tell you, because this stuff happens all the time. And there's no rhyme or reason either. Everyone wants to blame Putin or Sniffy Joe or Trump, or I don't even care. And the best lesson I ever learned about the markets, and I've said this 1,000 times, I'll say it 1,000 times more. I'll remember I must have been 95 or something like that. And I must have been 95. And I was up visiting my mom up in Maine. My mom used to go to the library and borrow these value line stock things, which I loved. I've always loved statistics like baseball, basketball, football, and all that. I just loved it. And the value line was like a big thing of statistics and this big stock chart. Anyway, and we got news that GM was laying off a bunch of people, General Motors. I said, "Oh man, that's going to kill the stock." And then it didn't kill the stock. I said, my mom said, "Well, I don't get it, man. Why did it kill the stock?" And she goes, "Because actually, it's going to help earnings because the biggest cost is labor. And when they're laying off people, that means they're going to have a bump in earnings." And she said, "The stupid, but that's the nature of the stock market. Bad news is good news for the short term, if they're short term." And I said, "That doesn't make any sense. You think laying off people is not a good thing." And yet the stock jumped up because basically they're getting rid of some of their highest cost. I mean, every business has cost of goods sold. And the number one part of that cost of goods sold is labor cost. And so when GM was laying people off, investors said, "Oh, good, we're freeing up some cash flow to make earnings PE ratios look better." I'll never get that. I said, that doesn't make sense. That was completely irrational. And I can almost guarantee you GM hasn't done crap since. It's nuts. Anyway, so just going back to Kenneth Bateman, who's lives in Ozarks. Get it? Because Justine Bateman, well, Jason Bateman from Ozarks. Wait, isn't just Jason Bateman? Wasn't he Family Ties guy? Family Ties, the Alex P. Keaton. No, that was Michael J. Fox. Yeah. So who's Jason Bateman? Who's Justine Bateman? I don't know. Anyway, whatever. But okay, that joke went off like a freaking lead balloon. Oh boy, I got to practice my jokes. All right. So I have no idea, Kenneth. So I don't know what the market's going to do for 1, 2, 3. You don't know. No one knows, and I get it. You're not. I get it, man. You know that too. But here's what I say: if you're still in the market, for the next 5 to 10 years, who gives a rat's behind? I literally don't understand. You just keep dollar cost averaging, dollar cost averaging, dollar cost averaging. Now, here's the counter to that. I'm just going to tell you right now. I'm going to tell you, and I've said this 1,000 times a Sunday too. If everything goes in one fell swoop, and I'm going to go back to 2008, I'm going to give you your old buddy Josh. All right. So I made in that year 32,000, 2007. 2007, I can't remember, but it's one of those years. I made $32,000, a wife and 4 kids, $32,000, man. On top of that, because the markets were getting crushed. Yes, 2008. On top of that, so not only was I not making any money because I was completely on commission, people were pulling out of their assets. So I was getting paid on fees. So my fees were going way down because people were pulling their assets out of the market, which had already been devastated, down by 40%. All right. So now they're pulling their assets out. They're pushing over here for what I can't get comped on, if not just going to the bank outright. On top of that, I'm losing assets, and the assets I'm keeping are being less and less under my asset under management fee. All right. So on top of that, my company, Smith Barney, said, if you guys don't start doing a certain level of commissions of $250,000, we're going to basically let you go. On top of that, I'm invested in Smith, it was like Mason stock, but Smith Barney stock back then. Now I wasn't, but I know other people that were. So that's a 3 strike you're out thing. You're losing fees because of the markets. You're going to lose your job potentially, and then your stocks are down 10 times 10,000%. You're smoked, dude. You're smoked. On top of that, your real estate holdings are getting crushed. If you have holdings, when I say holdings, I'm just meaning your home, because the real estate market is collapsing as well. So a lot of these guys are, and that didn't happen to me, but I know guys in my business whose whole thing was based on basically leveraging Legg Mason stock in which to buy real estate. And I tell you, man, when the markets fell off a cliff, the Legg Mason stock fell off a cliff. They got margin calls. They had to pay back their debt that they had on the leverage Legg Mason stock, and then they didn't have the cash, so they have to go sell real estate, and the real estate had fallen off a cliff, and now they're about to ready to lose their job. The point being is, everyone says stocks in the long term. Yeah, what I'm saying, it's all peachy when the stocks are going up, but think about it: when the stocks get smoked, and that coincides at the same time you need money for whatever reason, and the same time you happen to lose your job, that's a problem, man. That's a problem. That's why I tell you got to have some cash on the side. How much? I don't know. For retirees, like 4 years of cash, and cash could be Ginnie Mae. I've talked about it a million times a Sunday. Cash could be I bonds. I don't think that's enough because you'll only do 10,000 a year in I bonds. And for the record, folks, if anyone asks about I bonds, I see all the I've done videos on I bonds, videos. I don't want to get into that here. That just tells me either you're not watching the channel, which is fine. I get new people all the time, but I've done 1,000 videos on I bonds. I literally just did one the other day. I just did one. So let me just be upfront so I can stop people asking about I bonds. I can't believe how many comments are coming in about I bonds. It's nuts. I guess it's crazy. I said, there's nothing to lose. There's what I say is, what's not to like? 7% I bonds. What's not to like? That's what I said. And there you go. So I'm not going to say anything more on I bonds because it's only $10,000 per, and you're getting 7%. I don't even know what the hell it is. 7, 8, 9%. I don't even know. Why would you not do that? I don't get it. You're locking up your money for a year. That's it. If you sell it before 5 years, you lose 3 months of interest. What to do? So that's a smoking deal. All right, but anyway, so going back, I like Ginnie Mae for my better not say cash bucket because people say, "Who said cash?" For my safe bucket, I like Ginnie Mae. I like CDs, ladder certificates, and I like cash. A G fund, stable value fund. If you have stable value fund in your 401k, G fund, literally good old fashioned cash. I like all that stuff for my safe bucket. Everything else should be, in my opinion, in stocks. If you're not that far removed, if you're pretty far removed from retirement. Now, I have the Wellington Fund as my biggest holding because I actually think bonds have more upside than stocks do over the next 2 to 3 years. I could 100% be wrong, 100%. And guess what? If I'm 100% wrong and stocks have more upside, fine with me because I still got 70% in Wellington, and I'm still adding. Every 2 weeks, I'm putting a couple $1,000 every 2 weeks, every 2 weeks, every 2 weeks into VTI. So I got my bases covered. I think I got Wellington for my bonds, and Wellington's got about 30% bonds. I got 70% stocks, so it's a nice hedge. If bonds do well, like I think they're going to, then the bond side of the Wellington should reward me if relative to stocks. If stocks do better than Wellington, well, the 70% of stocks will reward me and the money I'm putting in every month. Pumping in money. At 2,000 a month every month. What I say? Yeah, something like that. I'm putting 50,000 here. That's what it is. Every month I'm putting in 2,000, whatever that is. Every month. So if the stocks go down, well, it sucks, but it's just not that big of a deal. Now, I don't have enough cash, and that makes me concerned because I just had to write these freaking checks to the IRS and Brian Kemp. But with that said, I got liquidity in that I have a nice home equity line of credit, which I don't want to borrow against. But if things went south against me, I would use that. That might be too risky for some people, but for me, I'm comfortable enough with that to say, look, I think that I will be okay if YouTube bans my channel and everyone throws arrows at me and no one likes me anymore and I can't get a job other than scrubbing toilets. And look, I don't want to do it. I've scrubbed toilets when I was in the Army. I've scrubbed toilets when I was a barkeep or not, when I was working in bars. I'm not too proud. You know what I'm saying? I'm not too proud. If that's what I got to do to put food on the table for my wife and kids, I'll freaking do that. I don't care. That's the nice thing about being in the infantry is once you're in the infantry and you're literally burning your own poop, as we used to go to Honduras, we have to remember that movie Platoon, where the dudes like they got pulled a poop out from underneath the latrine there. That's what we had to do in Honduras. You had to you poop, pull it out, you put Mo gas on there, you stir it up, you burn it. That's what we had to do when we were in Honduras. And then I remember, as a busboy, that's what it was. When I was working at a bar in Arlington, Virginia, working my way up, I had to bus tables, but also had to clean out toilets of all these people that puke everywhere and freaking just leave. And trust me, the girls' bathroom was even worse than the boys. It was freaking. Can I say that girls and boys anymore? The woman's bathroom was worse than the men's half the time. It was disgusting. And someone had to get down there and freaking scrub the toilet. So that's your old buddy Josh right there. Not too proud, my friends, and you shouldn't be either. Anyway, point being is if I gotta go do that, I'll do that. But I like to have some liquidity, and I don't have enough cash right now because everything I had to use my cash was for taxes, which I knew that going in. So I could rebuild my cash holdings. And that is truly cash. What I have at Navy Federal Credit Union, that's my cash, is literally what I want. So basically, for me, I got cash. Not yet. I got to replenish that, but I do have a home equity line of credit, which I can access if I need a quick influx of cash. I don't want to do that because that's a debt. I'm trying to get out of debt, but it's there nonetheless. Part two, let's assume I have the cash built up. Then I got my Wellington 3070, and then I got my VTI. And other than my Wellington, everything else is tax. I hate to say tax free because it's theoretically it's taxable if I have any capital gains in there. But there's not much interest on a VTI in terms of index funds. Doesn't have any capital gain. So in terms of there might be a small capital gain if I were to sell it, but other than that, nothing. So and then I get my Roth IRA as well. So anyway, hope that helps. That's the point, man. You just say to yourself, okay, what's the likelihood I could be laid off and have no income? Well, I need income. What do I do for that? I'm going to tap in my stock portfolio. Well, Brad just said his stock portfolio is down 40%. So you don't want to tap in your stock portfolio if it's down 40%. So you just got to be prepared for this stuff. All right. Yeah, so there we go. Buying more Wellington down close 20% from a size. Oh, man, for real? Wellington down that much? Let's see. Let me take a look at Wellington. I don't think it's down that much. The worst year Wellington ever had was in 2008. It was only down 22%. Now, with that said, 2008, the bonds did pretty well. So that helped where right now the bonds and stocks are getting hammered. All right, so Wellington is down. The high was 52.19, and now it's at 42.39. So 52.19 minus 42.39 equals divided by 52.19. That's 18.7, not including a dividends. But there you go. I say the Wellington is probably down about 16% when we factor in dividends off his high. Man, that's bear market, getting close to a bear market for sure, which is good. We've needed a bear market. We need one, man. I mean, again, I think I said this just the other day. Bear market shows who's swimming. A low tide shows who's swimming out their shorts on. I think Buffett said that or somebody. So a bear market is low tide. Then you'll find out who really is an investor or who is truly a speculator. Why are Dodge and Cox funds doing better than Wellington Wellesley? No idea. Brad says he's gonna have to tighten the belt. I don't get it, man. Are you spending down your portfolio right now? I don't understand. Hey, Eric. Muni's taking a big hit. Maynard, Texas. Right here, buying Vanguard Dividend Growth Fund. And just for the record, I don't look, man. I don't follow the markets. I mean, I follow Vanguard. I like, I don't. When I say follow, I don't even follow that much. So I don't know why funds are doing this over the. I have no idea, Frank. I don't care. I literally don't care. Why would So let's just analyze Todd's thing. And look, Todd, I'm gonna bash you a little bit. Who gives a rat's ass this year? God almighty. Look, the fact that you even asked that question, who cares? I don't even know what is Fidelity Balance Fund doing better than Wellington. I don't know. This year, what are we 4 months into this year, and we're already comparing funds for this year? What? I don't get it, man. It's, I mean, stop this, my friend. Stop. This is short-term crazy talk. Who cares? What are you doing looking at stuff? You got some funds you like, they're low expense. You say, yeah, I like the managers, I like the way they do business, and I'm good with it. What more would you need? Well, I'm going to jump out of Wellington Wellesley to go to Dodge and Cox. That makes no sense. Doesn't make any sense. I have no clue. In fact, I have no desire to know because it's boring. It's crazy to me how people like, yeah, it's just crazy. I don't understand it. It's like, this is short term nonsense stuff. Why do you care? I don't get it. Hey, I'll never forget a guy named Chris Davis, the Davis New York Venture Fund. I'll never forget reading about Chris Davis, and I'm big fan of it. I don't even know if he still runs the fund. It's NY. Oh, I forgot the ticker. It was NYX is the last three tickers, last three letters. I forgot what it is. Anyway, Davis New York Venture Fund. And Chris Davis used to say all the time that any good manager is going to be underperforming for 3, maybe 5 years relative to his peers. It's inevitable. Any good manager. And I remember reading this, and this is probably 15 years ago or something like that. Maybe 20 years ago, something like that. And I said, I mean, that broke the spell for me of trying to chase guys who are managing money better. And I never really fell in that spell anyway, because I was brought up by the Vanguard thought process. But anyway, it never really meant much. But it's just kind of like, this fund's doing better than that fund does. This fund is better. That's poppycock. Anyway, point being was, he said any good manager is going to have years, probably 3 to 5, where he underperforms his peers. And I'll never forget that. And I just always thought that was a great thing, because the Davis New York Venture Fund was kicking butts and taking names. I have no clue what it's doing since. But I remember Bill Miller from the Legg Mason Value Trust. He had 15 straight years of beating the S&P 500. And of course, everyone thought that Bill Miller had discovered gold. They said, this guy knows how to do it. And then after that, he just got smoked, man. It is what it is. I mean, so remember, we're trying to capture the market. That's it. If we can capture the market, we're doing fine. I can almost guarantee you, if you can capture the market-like returns, you're doing better than the vast majority of investors out there. So what so many people try to do is they say, well, the market's, we'll say it's up 5. I'm just for simplicity. And that guy's up 5.5. Everyone and their mom is focusing on that basically 50 basis points difference. They're saying, well, the market's only at 5, but that guy's at 5.5. So that guy's a market beater. I want to go after him. I want him to invest my money. All that energy and fees to try to capture the guy who beat the market just by this. It makes no sense. And you're like, okay, but just because he beat the market last year or the last 3-5 years, there's no guarantee that he's going to do it again. In fact, if anything, he'll underperform significantly, as Chris Davis said. There's a guy named Kevin Hebner. In fact, let's take a look at Kevin. I've done this before. It's been a while, though. Let me look at old Ken Hebner. Ken Hebner. Let's see what he's about here. Mutual funds. Yeah, that's not the same guy. Oh, yeah. So let's check this out. Yeah, there we go. So there's Ken Hebner. This is June 10th of 2011. Yeah, CGM Focus Fund returned to sure footing in 2010, beating the market slightly. Let's see if we can up 17% versus 13% for the S&P 500. While investors may be longing for a return to the world-beating 80% gains the fund put up in 2007, Hebner has undoubtedly been adept at picking out market trends in the past. So basically what happened was Ken Hebner was a number one performer for that decade. I'll share with you another fund that was as well. So let's see what CGMFX has done. And we're going to go to Portfolio Visualizer. All right. And we're going to see what CGMFX has done. So hold on just a second. So everybody, their mom, Ken Hebner, Bill Miller, Ken Hebner, yay! Oh, these guys are great. Kathy Woods, yay! I love Ken Hebner. They're the best. CGM. I wonder if it's even still around. CGMFX. Excuse me. Yep. I got a frog in my throat. All right. That pulled pork I had. Oh man. Oh man. Oh man. All right. So we're gonna go. So let me let you guys see what I'm doing here. That Ninja Foodie. Someone had mentioned to get a Ninja Foodie. I did it, and it's freaking. I love that thing. All right, so here's CGM Focus Fund. So going back to 1998, it's worth $88,000 now. All right, so let's compare that to the S&P 500, or we can compare it here. I want to compare right here. Benchmark right there. We'll do it to the Vanguard 500, S&P 500, and let's see which is done better. I have no clue, but come on, man. Let's get this party started. Let's go. Portfolio Visualizer. There we go. So what's this? This is S&P 500 in red. That is up to 65,000. Here's Ken Hebner, which is up to 88,000. So Ken Hebner has beaten the S&P 500 going back to 1998. All right, so let's fast forward. We're going to take out the years until we'll start 2010. All right, this is because 2010 is that's going to miss a decade where he was the number one fund manager in all the world, essentially. So I have no idea. Let's see what happens here. Oh yeah, so you can see right here, Ken Hebner has only averaged 3.4% a year from 2010 to 2022. Compounded annual growth rate. Not only is the average only 3.42, his standard deviation, his volatility is about 50% roughly higher than that of the S&P 500. All right, so I mean, again, look, don't take this wrong, but a fool would say, and I'm just going to show it to you here. A fool would say Ken Hebner is a good fund manager because he smoked the S&P 500 going back to 1997. He's beaten it. I mean, that's just foolish because you're like, okay, I mean, you can say that, but it's simply you take out the times where he's right here. He didn't. It's kind of like the small cap value thing. A fool would say small cap values outperform everything else historically. Well, it doesn't. It hasn't. I mean, if you take those 5 years out from 1978 to 1983, it's just simply not. You just had an anomaly, and that's an anomaly right here. All right. So could Ken Hebner come back around? Maybe. I don't know what the fees are on this thing. I bet they ain't cheap though. All right, so let's look at another one too. That CG. I want to show you something else here. We're going to go to a USAGX. This is the USA Precious Metals Fund, another top performer in the aughts. And so check this out here. So look at the max drawdown of the USA Precious Metals Fund, 77%. The top to bottom, if you're 77%, look at that. I mean, my gosh, that's crazy. So going back to 1998 till today, let's see. CGM Focus at 88,000, USA Precious Metal Funds at 76,000, and Vanguard S&P 500 is at 65. So obviously Vanguard S&P 500 it sucks, man. That fund sucks, dude. So we're gonna go to 2010, and we're gonna show you something. Go right here, end of 2000. Yeah, I guess end of 2009. There we go. So watch these two guys smoke the S&P 500. There we go. So here's the S&P 500 in 1997 to 2010. The S&P 500 only grew by $4,000, 40% on a $10,000 investment. Here's USA Precious Metals, $96,000. $96,000. And if we actually make this from 2000 to 2009, it's going to get even worse for the S&P 500. So check this out. This is fun. All right, look at this. S&P 500 is down at $9,000 at the end of the decade. USA is up to $89,000, man. I don't even know what that is. That's, 9 times. You made 9 times your money in the USA Gold and Precious Metals Fund over those 10 years. Crazy. Ken Hebner, $51,000. All right. So check this out. We're going to go from 2010 to right now. And I'm going to show you the difference. I still can't get over that 70% drawdown. Here's 2010. USA Precious Metals is at $7,900. 7,900. Ken Hebner is at 15,000, and S&P 500 is at 46. What does this mean? I have no clue. None. But what goes up comes back down every single time. That's why my concern, frankly, is that let's take a look now. Let's compare VUG with VTV. And this is why I've been saying dividend paying stocks for a long time, because if we look at the last, all right, so here's, what's this? Yeah, Vanguard Growth is smoked Vanguard Value. This goes back since 2010. 62,000, Vanguard Value 42,000, S&P 500 50, something like that, 50,000. Anyway, so Vanguard Growth. Now let's just go back to the last 5 years. What comes up comes back down. It's just that simple. I don't even want to say reversion to the mean, because I don't know what the mean is. No one knows. But the facts are, if something is way overwhelming, look at this. So here's VTV. So here we go. $10,000 at the beginning of 2015. At the end of 2021 is worth $33,000 for VUG. Is worth $20,000 for VTV. Is worth $26,000 for S&P 500. So $33,000, and now the Vanguard Growth is down to $25,000. Point being is you just don't know, man. You don't know what's going to show up. Everyone knows who Peter Lynch is, right? Peter Lynch, right? He managed the Fidelity Magellan. No one knew who the hell Peter Lynch was in 1978 when he took over management of the Fidelity Magellan. No one did. No one knew who he was. And so everybody, their mom says, you can find a good manager who's doing better than the other managers. It's like, yeah, but he might have, but how do you find him before he's known? No one knows that. I just stop with this moving around. It doesn't make sense, man. Keep your fees low. Keep yourself diversified. Don't jump off a bridge when the markets go down, because it goes down. How can people not be prepared for this? If you've been watching my channel, I've been saying it for years. We've already talked about recessions, but there's a bear market every 4.5 years or so. We haven't had one of any significance since 2009. Of course, it's going to be another bear market. We'll see, Kurt. I mean, I don't know. I literally have no clue. I think about this all the time. Like, what about earnings? Well, earnings drive stock market. That's it. So as long as earning, and this is what we're probably gonna have an issue with, earnings. What is it? Apple? I can't remember. Amazon. Does Amazon even have a PE ratio anymore? I can't remember. But anyway, if earnings go down, the stock market will follow suit. It's just that simple. If earnings go up, the stock market will follow suit. Everything depends on earnings growth. If the earnings growth go south from where they were the previous year, the stock will probably follow. It's all based on earnings. If companies aren't making earnings relative to where they were last year, investors get spooked. Now, if companies are making earnings growth and they just have a write-off quarter because they had some big write-offs or something like that for goodwill, that's no big deal. But if they have investors don't like it, but that's not a big deal. But if they're like GE, for instance, and the earnings are going down consecutively, that's bad news. I don't know about that through the stock market as a whole, i.e. the S&P 500. Are earnings going down? I don't think so. I mean, I think there's some stocks, sure. I don't think earnings as a whole are going down that much. And one of the reasons I said why I always like the value stocks over the S&P 500 even is because the S&P 500 still had but 25% of the whole entirety of the S&P 500 was in the FANG stocks. If those FANG stocks go up, the S&P 500 look great. If the FANG stocks go down, S&P 500 doesn't look that good. And I think that might be happening a little bit here now. But I don't know. I just think if earnings continue to go on the upside, we're going to be fine. If earnings go south for many years, we're not going to be fine. I just don't think they're going to go south for many years. I don't. I believe in the capital markets. I know it's quasi-fascistic. I get that. That's not necessarily a bad thing for stocks. I'll tell you that right now. The government limits competition. The government finances companies like Twitter. Guarantee Google, Tesla. All these guys are in lockstep with the government. So we know that Elon Musk. How do he make his money? Oh, selling green carbon credits. My goodness. All right. At the end of the day, should you buy Tesla? I'm not touching the 10-foot pole, but I guarantee I got Tesla in the S&P 500. I guarantee I own some of it. Not much, but I guarantee I do. So anyway, the issue is when you have this somewhat quasi-fascist state that we're in, and that's not jackbooted thugs fascist. That's the economic definition of fascism. Big business doing the bidding of big government. Yeah, some of these companies, their earnings, it's almost like a utility stock, if that makes sense. All right. Are you still in cash this whole time, Eric? So we've been talking since on this YouTube channel. Eric's been in cash. Buy it when it's up and buy it when it's down, or put it in coffee cans. Wow. Portland says between inflation and people moving from the state, it feels like a ghost town. Eesh. Some brilliant guys steered me into Wellesley in January. Other holdings have been tempered to 60-40 also. It's okay. Yeah. Is Facebook a buy right now? Let's take a look. That's what man Andrew's saying. Let's take a look. Meta. FB. Yeah, look at that PE ratio at 14. Damn. That's crazy. PE ratio of Facebook's at 14. Amazon's PE ratio is only at 38. That's not bad. I still can't. I cannot get over. I just can't get over Amazon. What's Google's? Yeah, Google's PE ratio is only 20. All right. Buy bank stocks since the refi mortgage employees being let go. Are they being let go? Hey, my man Chris from Maine. I don't know, Vaughn. I don't know. Are bankers being let go? Justin Bateman. I think it wasn't Jason Bateman. Yep. I went through the March 2000 technology crash, and market did not do much for 10 years. Let's go back to Portfolio Visualizer because I want to show you guys something else too. And this is something that, oops. All right, so I just want to show you guys something. So we're going to go back to S&P 500, and we're going to go from 2000 and 2000. Right here. There we go. So look at this. Let's make sure we got that right. Yeah. S&P 500 from 2000 to 2022, compounded annual growth rate is only 6%, man, for 20 years. That's not barn burners by any stretch of the imagination. It's just not. So we got 2 decades of middling below average rates of return. Now, I have no clue. I don't have the slightest idea. And I don't like using the historical rates of return. I certainly don't use that in my models. I use the Vanguard models, which are pretty low. But still, you can't say it's a bubble relative to where it should be. And everyone does. I get it. But it's like, wait. We've only averaged 6.63 over the last 20 years. But Josh, the valuations according to the CAPE ratio are through the roof. They've been saying that for years. Stop clock and all that. But my goodness, it's like, can we stop with the CAPE ratio stuff? Crazy. It's all contingent on earnings. Are the earnings there? Yes or no? If the earnings are there, the market will continue on. If the earnings aren't there, what happened to Amazon? The market won't. But now Amazon's got a PE ratio of 38. That ain't bad, man. I mean, that's not expensive. Now you took it on the chin a little bit, but get up off your feet and just unless you're about ready to retire and you're just like putting money back in, this literally is no big deal. Look at that. Compounded annual growth rate, 6.63%. That's it. Over 23 years. Yeah, 23 years. Crazy. If we look at 1985, it'll be much more than that. All right, so look at this. Compounded annual growth rate from 1985, almost twice that. Anyway, the point being is this an anomaly? So basically, is the anomaly from 1982 to 1999, was that the anomaly where we had I think the S&P 500 averaged like 17 to 18% a year, or was the anomaly the last 2 decades essentially, where we've averaged 6.63? I don't know. I just find it interesting. I have no clue. But again, we've had 3 of the last 4 decades have been phenomenal rates of return on the markets. I think it's because of globalization. And I think that day's done. I don't think we're going to get 82 to 99 returns. And I don't think we're going to get 2000, the teens returns either. I think we're going to get probably 6 to 6.5%. I think that's what we're going to get. That's not phenomenal. It's not. But it's not, we're like, oh my goodness, I'm not getting anything. Sure you are. I'll take 6.5%. Absolutely, 100%. But it's going to be up and down. Doesn't matter what year, when markets go up, markets go down. But historically, and again, until we can see the future, we can't predict this. But historically, the ups are permanent, the downs are temporary. Ups are permanent, the downs are temporary. Other than for people who are pulling pulling money out of their portfolio. If you're pulling money out of your portfolio, well, you miss my barbell videos, because that's what you really want to get involved. You got to have some money on the side, not to be selling stuff right here. S&P 500 is down 13.5%. It's not even close to a bear market. NASDAQ's down 22%. The beginning, that's a bear market. No other way around that. Not a significant bear market yet. Small caps are down 20%. Hey, whoa. Did we see Denise on here? Hey, Denise. All right. God bless you, Denise. That's awesome. Yeah, right on, man. Hey, everybody loves Denise. I have no clue what I bonds will be. No idea. Yeah, all I know is Harry told me Tesla is still a solid buy. At these rates, they're basically giving away the shares. Man, disruption of grain from you. Oh, I do want to talk about no 1%. We should be canceling ethanol requirements 100%, and putting the acres into food grain. I could not agree more. This is insanity. It's insanity. Stop the freaking ethanol. But you're gonna lose the Iowa primaries. Well, I hate to say it, man, but maybe we change the primaries in. I'm sorry. Subsidizing the freaking corn to put in our cars is freaking insane. Everybody knows it's insane. And again, we know Trump. He was out there saying, Trump, I'll never forget the primary in 2016. He's like, I won't cut the subsidies. I was like, man. All right, I want to show you guys. You think that's bad? Northern Captain. Check this out. The world has gone bonkers. Northern Ireland faces loss of 100 million sheep and cattle to meet climate targets. They'll need to lose more than 100 million sheep and cattle to meet its new legally binding climate emissions targets, according to an industry commission analysis seen by The Guardian. The large-scale reduction in farm animals comes after the passing of the jurisdiction's first ever climate act, requiring the farming sector to reach net zero carbon emissions by 2050 and reduce methane by almost 50%, because methane is a worse greenhouse gas than CO2. Where does methane come? Literally cow farts is literally what it is. About a third of human-caused methane emissions come from livestock, mostly from the burps and the toots of the beef and dairy cattle. And that analysts by KPMG estimates more than 500,000 cattle and 700,000 sheep would need to be liquidated to meet the new climate goals. You're going to tell me again these climate people are our friends? Oh, but let's focus on Ukraine and Russia. Let's focus on, I don't even know what the hell we're focused on anymore. It's the green climate stuff I gotta be careful what I say. It's the green agenda, my friends. How can people, it's insane how Republicans can't get this. They say, I want to focus on over here. I want to focus on there. I want Elon Musk will say, it's insane to me. It's the green lobby. It's freaking absolutely anti-human, and it's just, this has got to be beaten back. Separate analysis by UK's government climate advisor suggests chicken numbers would also need to be cut by 5 million. Both the pig and poultry sectors in Northern Ireland have seen rapid growth in the past decade. Agriculture accounts for about 27% of Northern Ireland's greenhouse gas emissions, with the vast majority coming from livestock. Its heavily export-driven meat industry principally supplies Great Britain. Chris Stark, I can't remember the CC, what was that? It was the Climate Commission committee, told The Guardian that switch to arable farming would probably be necessary if food production levels are to remain the same in Northern Ireland. A condition of our modeling is that we produce the same amount of food per head, but it's very difficult to do this unless you see a change in farming practices. Yeah, especially unless you see a shift in arable farming versus livestock crops. How are you going to do this, though? Not only does agriculture account for a large slice of Northern Ireland's emissions, it also accounts for a lot of the GDP, too. There is a reason why Ireland is dominated by pastoral rather than arable farming, is because most of the land is unsuitable for growing crops, you freaking fool, Chris Stark. You can't just start planting freaking seeds in there and peppers and tomatoes, you freaking idiot. Much of the land is rocky and the climate is far too wet. That was why Ireland was so reliant on potatoes. Currently, only 4% of Northern Ireland's farmland is arable. Although farm labor accounts for only 7% of the country's labor force, many depend on the rural economy. Altogether, the rural population makes up about 40% of the total in Northern Ireland. Destroying a large part of the farming sector would be catastrophic for the rural sector. And then he says, shades of the infamous Soviet land reforms. Because remember what happened? I just posted the other day, too. I posted the other day, too. In Ireland, this is not Northern Ireland, this is Ireland. We don't want to take people's house to put Ukrainian refugees in there. We don't have to do that. We just prefer they volunteer. Mao's Soviet land reform, Mao, Ho Chi Minh, Khmer Rouge, Castro. It's freaking crazy, man. And these people are like, oh, let's talk about Elon Musk. I'm not saying you can't talk about two things. Or let's talk about what freaking Sniffy Joe said. It's like, let's talk about this Ukraine Russia thing. I cannot believe how easy people are to be led on something that's absolutely irrelevant to us. Absolutely, it's crazy to me when we have these guys right here just marching through unaccosted, unarrested, just doing whatever the hell they want to do, and everyone's like, "Yeah, it's green, it's great." And we know they want you to eat for your bugs, for your protein. We know that for a fact. The World Economic Forum said that. They did videos on this. And by 2030, you'll own nothing and be happy. And they've had other articles and videos of eating bugs for protein. Oh, but Dan Crenshaw is going to save us. Oh, he's a young global leader. Oh, yeah, but no, he's out there to change. He's out there to, what's it? Tulsi? She'll save us. Tulsi's a young global leader too. No, but they're gonna stick it to him. Putin will save us. Putin is a young global leader too. Oh no. Well, and I'm being facetious here, but he's a young global leader too for the World Economic Forum. Justin Trudeau, young global leader. Isn't it funny how all these young global leaders have one agenda only? And I tell you, man, I'm not convinced that Putin isn't part of the scheme. I literally, I think Putin is part of the scheme. I really do. I think it's all one big uh, co-op here of the World Economic Forum and the globalist cabal. Oh, you're such a conspiracy theorist. Okay, it was global. Was Putin a young global leader? Yes, yes, he was. Yes, he was. What did what's his name? Klaus Schwab say with the young global leaders? He loves having these people in government. He loves having these people in government. How many young global leaders on American government? I don't know, but I know Tulsi was. I know Dan Crenshaw was. There's some others in there too. And I'm just telling you, man. But Dan Crenshaw, he has a patch on his eye. I don't care. Young global leader, you're a big no go to me right out the gate. I mean, I don't know who else is. I have no idea, but I can only imagine. It's probably not very pleasant. Probably not something I want to see. All right. Uh, you got it, Denise. Hey, Choctaw. Today's my first day of full retirement. Sweet. What is a Sunday? Choctaw. 43 years United States Air Force. Oh boy. Oh boy. I'm just goofing you. What age did I get my long-term care insurance? At 37. No, I was 41. My wife is 37. Yeah, about 10 years ago. Yep. Hey, just retired last week from Fed. Right on. Visit Honduras. I won't be returning. Oh man. All right. I like CD ladders. Big fan. 100%. Big fan. All right. All right. So you could be a call center rep at a finance firm making 500 to 1,000 a year instead of scrubbing toilets. Never going to do that again. Who said that? Kenneth. Never going back to being working for a financial firm. No way. So here's Johnny Ripple. Total collapse. Hopefully. Yeah. You don't know what you wish for, man. I think it's funny these people say, "Yeah, it's about to hit the fan. It's gonna be great." They have no clue how much they're relying on the current structure of our government. Frankly, there's no other way around that. All right, there's Paul. Oh yeah, right on. Sorry, people identify birthing people. Paul says got fired for not taking the jab. Had 3 years of cash, but the hardest thing is seeing the market down like this and wanting to invest. Yeah, no, 100%, man. 3 years of cash, I probably wouldn't be investing that if you're not working right. Well, you're retired. I'd probably keep that alone. That's for sure. Yeah, I mean, exactly. Andrew says 13 years of solid gains, not afraid to take cash to the table, just retired at 59. I mean, look, I've said 1,000 times a Sunday, take your gains, take your gains, take your gains. I don't know what else to say. I mean, it's up to you guys. It's not you. I don't control you. I'm just a freaking guy on YouTube with a t-shirt. Haven't shaved today. I just got it back in the from planting some stuff for the old lady, moving some rocks. Got 20 bags of rocks because where Finney runs back and forth in our fence line there, he's causing a big old kerfuffle, and we got to put rocks in there. And then what did I plant? I didn't plant anything, but it's just my dog. It's just me, your old buddy Josh. Nothing fancy here. VTI is an ETF. Yes, I think it's a woman. Yes, ma'am. VTI is the total stock index of Vanguard. Yes, yes, indeed. Denise says she ran the calculation paying annually. Oh, I thought you were talking to me, Eric. Sorry, brother. You're talking to Denise. Well, sorry. Don't let me get in your way. Don't let me jump into your conversation. It's just my live stream. You guys just talk amongst yourself. Don't include me. Yeah, you got it, Ron. That's freaking awesome, brother. Love it. I can't say if you should keep maximize your contributions to your 401k and Roth. I mean, why would you stop? You were doing it yesterday. Now you're thinking about stopping now. All right. Yeah, what's Pelosi's husband doing? Right on. Oh, 100%. That's great. All right. All right. So, Sergio, 50% market crash will leave you with 8% compounded annual growth rate for the last 12 years. Yeah. I mean, that means you're doubling your money every 9 years. Yeah, 100%. If someone's not ready for a down market, 13 years up, could not. Yeah. How dare you say that, Kirk? How dare you? I can't even say that right now. All right. Hey, that's from Indy. Right on. All right. I got tons of safe money, but still nervous with 39% stocks and less than 10% bond funds. This type of drop okay, but expected. I feel like the economy is falling apart like never before. I don't know what to say. I mean, I just I I don't know what to say. I don't know how you can say that. I just don't, man. We're not rationing. I mean, jeez, there are no rations. How could it look? And Jill's, I consider a friend of mine, but can we perspective, my friends? We don't have ration cards. You recognize they had ration cards during the wars, right? We had ration cards. You recognize the 1930s was the Great Depression. Right, so we had ration cards during the wars, the Great Depression during the 1930s, where everyone and their mom thought Soviet Union was the way to go, and a lot of Americans actually moved to the Soviet Union because they thought it was the land of milk and honey. They were lied to because that's what evil does; it lies to you. So we have ration cards, we have the Great Depression, we had the 1950s and 60s. I mean, we could say they were booming, but that's still a freaking pretty scary time because we're worried about the nukes and all that stuff. We still had the war in Korea. We still had a president getting shot. We still had the civil rights craziness there. We still had Vietnam. I mean, a lot was going on back then. Then we had going to the 70s, which is, we had rationing, right? We had freaking commie infiltrators all over the place. I mean, don't forget that was the 70s when Bill Ayers, Obama's buddy, bombed the one of these guys. I mean, they had bombings in the Capitol. It's funny how they're complaining about the January 6th insurrectionists, and yet we've had the Puerto Rican Liberation Front literally sent bombs in the Capitol. I don't know if they killed people, but they literally bombed the Capitol building. They bombed it. No one did that on January 6th. And yet, what did Bill Clinton do? He pardoned those guys from the Puerto Rican Liberation Front, whatever the hell that was called, the PALN or something like that. Yet Bill Ayers literally bombed. People died because of people like this. And yet Bill Ayers is Obama's, freaking right-hand man. Oh, and by the way, Bill Ayers is sitting at university campuses making bank. Bernadine something recently was pardoned, and she's sitting at university campuses making bank too. It's all freaking fake. Anyway, it's all fake. But we're not dealing any of that crap. None. There's no war here. We don't have people with guns in your head. We don't have ration cars. We don't have rationing. We don't have unemployment through the roof. It just is crazy to think and I hate to say it, but it's all politics, man. And I'm talking to everybody, not just Jill. If Biden wasn't in charge, you guys wouldn't be saying you think the economy's falling apart. You just wouldn't. And you could say, well, the economy wouldn't be falling apart. I don't think so. I think we'd be right where we are now. I'm not sure it'd be quite the same because I'm not sure Putin would have invaded Ukraine, but I don't know. I mean, it doesn't matter. It is what it is anyway. But what I'm just saying is, Trump, I'm telling you, man, it's not like the president has that much control over the world economic issues. They just don't. This always bothered me when they say Reagan created more jobs than anyone else, or Clinton created more jobs, or Obama, or the stock market did better under this. It's the president doesn't. The president doesn't do this. The president doesn't create jobs. American individuals create jobs. The president doesn't do it. For heaven's sake, it drives me insane. When people say the president under Trump was, he was great, and then under Biden is bad, or under Biden is great, and under Trump is bad. It's all silly. It's all silly. They're sitting there thinking, do you really think if Putin didn't invade Ukraine, that there wouldn't be shortages coming from fertilizer shortages coming from Europe? Oh, wait, there already was. There already was before Putin invaded Ukraine. You know why? Because I did a video on that, but back in October or September of last year. You know why? Because the Greens that control everything, because you will own nothing and you will be happy by 2030. And so the fertilizer issues, do you really think that The price of gas would be way low if Trump were still in office. Of course not. Of course not. We got to stop this stuff, man. We still have food. We got full belly. Prices going up. Yep, 100%. Sucks. You have to get used to it, deal with it, and then and hopefully cooler heads will prevail. That we say, hey, let's stop this green nonsense. Because at the end of the day, that is a big cause of what's going on. I don't deny that. But the greenies over there in Europe are doing it, and then we're following suit, unfortunately, now with Sniffy Joe, which sucks. But it's this is why I don't understand. Well, I do understand why why we're thrown in with the blue and yellow, and as opposed to being neutral, because that is the way to keep the empire going of this Green New Deal, World Economic Forum, globalist thing. It's just such a freaking clown show. And I can't believe many right wingers don't get it. It's so frustrating. And so we're going to send Ukraine 33 billion now on top of the 15 billion we already sent. And yet we can't afford a man on the moon. That's what it always cracks up and say, yeah, not so sure I believe we actually went to the moon. Whoa. I said, how come we haven't gone back since 50 years? And what they'll say is, well, we lost the technology. That's what literally the astronauts say. We don't have the technology. I said, that no. And then people say it's because we don't have any money. We can't afford it. I say, well, it's weird because all of a sudden out of nowhere, we got 33 billion to go to Ukraine on top of 15 billion we already had, which is weird. So apparently we have the money. It's there. It's just sitting in some vault someplace, but apparently not for the moon. Oh, by the way, did you know? I had a chuckle at this, that Google a couple years back was trying to get this thing where people could send a rover to the moon and take digital videos and all that, which sounded pretty cool actually. And they were going to go to the place where the Armstrong guys supposedly landed, and as I was picking up steam, Google's going to offer $30 million to companies to do that, and more companies are trying to do it. They're saying, yeah, we can do that, we can do that, we can do that. And as it's getting more and more traction, NASA said, no fly zone, can't go around the area where the Armstrong people landed. They don't want it to upset with radiation or contaminate that site. They want to keep it for historical reference. Oh boy. I can't stand BlackRock. BlackRock can kiss my big fat white behind. That's all I gotta say about BlackRock. Freaking evil incarnate. Stay away from BlackRock. That's not saying Vanguard is that much better, but Vanguard is the devil I know, and I know him, and I just like Vanguard. BlackRock, and they're still a publicly traded company. Larry Fink and his bunch of freaking, stay away from BlackRock, man. Evil incarnate. They are the whole cause of this stuff. Let's just take a look at what. Hey, my wife just gave me a thumbs up on Facebook. Hello, babes. Let's just take a look at BlackRock's website and see if they're still talking about climate change as they used to on the front page of the website. Let's take a look, shall we? Okay. So there's BlackRock's front page. All right. Larry Fink's letter CEO. He can. You're right here. Still net zero. A greener future begins with equity. Equity, social impact. Equity, not equality. Equity. Expanding voting choice for clients. These guys are clowns, man. Oh, how I despise this group of people. Larry Fink on the Russia-Ukraine conflict. Larry Fink everywhere. Just horrible. Let's see. Yeah, stay away from these guys because they're up to no good. That is just a fact, Jack. Oh. Yeah, I had a great pick on XOM. I sold it. I made 50% and I sold it. Yeah, now it's at 85. You gotta be kidding me. So I bought it at 41. I sold at 64, and now it's at 85. Don't follow my advice. The U.S. economy isn't being killed. Oh, I want to show you guys something else too. A lot of people think China, they're going to take over, Josh. I said, really? I had a couple comments. Well, why do you think China is so rich? I said, China's rich, huh? So let's take a look at something. I thought this would be fun. We're going to look at list of countries And I don't want to do PPP. That's freaking stupid. But I thought I had. Hold on just a second. Right there. Let's go back. Hold on just a second. There we go. List of countries by nominal GDP per capita. All right. So what we're going to do is we're going to say, oh my goodness, look at all these countries. I don't even know how to pronounce that. Monaco, Luxembourg, Bermuda, Ireland, Norway, Cayman Islands, and Switzerland. Look at all that. Look at all their estimated GDP per capita. They're so much better than the U.S. Look at here we are at 63,000. And here these guys are 180, 173, 117, 123. Ireland? What? Ireland? Ireland's a poor country. What the hell? Oh, because we go down here, we're going to show you something here. All scams, all scams. Many of the leading GDP per capita jurisdictions are tax havens whose economic data is artificially inflated by tax-driven corporate accounting schemes. For instance, the Irish GDP data above is subject to material distortion by the tax planning activities of foreign multinationals in Ireland. To address this, the Central Bank of Ireland created the modified gross national income as a more appropriate statistic. And the IMF and the Organization of European, I don't know what that stands for, adopt as well. 2015, Irish GDP is 143% of Irish GNI. Anyway, so this thing right here, nominal GDP, is just clown show because we know Ireland has a lot of poor people in it. But anyway, so we're not going to that. So let's look at you. Oh, here's the U.S. 63,000, number 12, 63,000 in terms of nominal GDP per person, per capita. All right. So we're going to scroll down here a little bit and we're going to say, where's China? What? Germany? What? Remember, U.S. 63,000. Iceland is 63,000. Norway, I think, is the only one that's bigger than us, 66,000. Yeah. So we're going to go down to France, Taiwan, Kuwait, Japan. I don't even know what Andorra is. Guam, Malta, Cyprus. Anyone seeing China on here? Anyone? Czech Republic, Saudi Arabia. Where's China? Anyone can say, where's China? Portugal. What? Oman, Slovakia. You got to be Greece. Iran, what? Poland, Uruguay, Seychelles, whatever the hell that is. Keep going. Oh my goodness, there's China at 10,000. China has less GDP per capita than Panama, than Chile, than Croatia, than Poland, than Uruguay, than something called St. Kitts and Nevis, than freaking Romania, than Palau or whatever that's called. Then Malaysia. Take that China. Here's Russia way down here. Isn't that interesting? Where's India on here? Did I ever see India? Look at India's only 1,900. Isn't that nuts? But take that China is going to stomp the United States and shove it where the sun don't shine. Because A, USA kicks ass to take names, and B, it's simply not true. And China is on the precipice of an economy that's going to fall off a cliff in the next 5 decades because they don't have enough young people. They just don't. By the way, I think you need to change your mind on immigration. There's not enough young people in America that can do the work that we need. There's just not. I've been firmly now come to this conclusion. There's just not enough young people in the United States that are going to do the work that you want to get done. You want to get something fixed. You want to get new roofing. You want to get this. There's just not. And we can blame it on Masoli, Alan Simpson Masoli from 1986, the amnesty bill that Reagan signed that will stop it forever, which destroyed wages for laborers in the United States, which it 100% did. So basically, that was just game on for immigrants coming over here and reducing the wages for Americans to be able to afford to work in those industries. But I tell you right now, don't think that immigration is that we don't need it. We do, big time, because there isn't enough young people to do what we need, and they're just not. And I hate to say it, they're not coming out anytime soon to change the world, to say, oh, now all these young, great Christian white men and black men in America are going to come and, solve us for what we need, because I need to get some plumbing done. There's some, I'm not lying to you, but not for what you think. And as such, you better hope there is immigration that continues to come here, because we need it big time. Anyway, so just as a side note, and so we look at China. Who wants to immigrate to China? Well, no one does. So no one's immigrating to China. It's just not going to happen. China's colonializing Africa because that's all they can do. When your economy is falling apart, what you do, you colonize people. That's literally what they do, and they're doing that for their coal and all kinds of their minerals and whatnot. But they have no GDP per capita. I mean, it's just silly to compare that to the United States. And the entire country, yeah, they have a high GDP just because they have freaking so many people. Same with India. But relative to the average Joe, I don't know what the average Joe in China is like. What's the Chinese word for Joe? I don't know. Ming, I don't know. So the average Ming, I guess, is that Chinese? Probably Ming Dynasty. They're just not making any money relative to us. Not even close. So stop with this Chinese going to take over. It's just stupid. In China now, because their one child policy is falling off a cliff. Russia, because their insane abortion policies are falling off a cliff. So 5 decades, these countries will just be nothing. That doesn't mean they'll exist. There just won't be the competing powerhouses that they are. This is the last gasp. It'll be interesting to see what happens with India. I don't know, but this is the last gasp. And yet, America has enough immigrants and enough young people. Even though what I just said about young people doing the laborious work, they're not going to do it. But we have enough young people and enough immigrants that we can survive. It's good. It's good to be in America, man. Don't discount that. Even with Sniffy Joe, can people not remember how bad? Don't forget, FDR made it illegal to own gold. He told farmers to plow their farms to keep the prices of the produce high while people are supposedly starving during the Great Depression. And they were. I don't deny that. We had 25% unemployment in the 1930s. People were actually emigrating to the USSR. Literally, they were emigrating to the USSR because they thought it was better there. Yeah, you don't have to believe me. Just read it yourself, man. There's a great book, Victor. Oh man, what the hell is it called? I forgot what it's called. Anyway, let's see if we can't find the Victor book I got. Oh man, all that moving the rocks. Where is that book? It's fantastic. And he did in 1980. There's a movie on it too. Oh man, I'm not gonna find it. I can't find the books when I need it. It's probably upstairs. Why would I put that book upstairs? Dag nabbit. Dag nabbit. Dag nabbit. I am not prepared to talk about the Victor book that I want to see. Shoot. Oop. Yeah, I don't know where's that. Victor. I can't remember his name. Anyway, Victor something. And he was actually an Olympian. And his dad was a worker for Ford, I think. And they emigrated to the USSR because they want to make some money. They were making any money in the United States. And then it's a horrible story. Anyway, you should. All right, so my man says, if the market's down, why would it not be a great time to do Roth conversions? 100%. Big fan. Yep. Having no debt, says the A10 pilot. Not even a mortgage makes me not sweat when the market moves. 100%. Yeah, I completely agree. People are panicking for no reason. 100%. They don't have experience in the market. I bet they do. I don't know. Maybe you're right. Maybe they don't. But there's no reason to panic here. None. Yeah, don't. CNBC, come on, people. It's a freaking fraud show. Right. I would think so. I think immediate annuities should improve with higher interest rates. 100%. Uh-oh. Oh, here goes Pablo coming in. Hello, baby. You want to come say hi? Trying to secure a $300,000 loan to buy a $1.5 million car wash. Probably not going to happen. Why? Oh, you know what's actually looking pretty good right now? How dare I? And don't tell Dave Ramsey I said this. Whole life insurance. Oh, no. Whole life insurance. How dare you? It's a scam. You can check your whole life insurance accounts to see how your cash value has it dropped. Has it dropped? No, hasn't. I've done videos before. I talked about why I like whole life insurance, and it's funny how many people It's a scam. Insurance isn't an investment. Well, it has a cash value that pays a tax-free dividend or tax-free rate of return, and also has a death benefit with it too, for sure. And by the way, it also, oh, well, I guess I was going to say, it's a wonderful product if done correctly. And I'm not talking about universal life. I'm talking about whole life. It's there for your whole life. You pay the premiums. It's there for your whole life with a cash value component. It's freaking. I'm a big fan. Oh, there's Sergio. Look at Sergio praying for Denise. That's fantastic. 100% PB. Peanut Butter says someone once said time in the market is worth more than timing. 100%. Yeah, I cannot agree more. It's just, it's always. I mean, it's always the worst right now. Always is. I remember 1998. I can't remember if that's a Mexico devaluation, the day of the Asian tigers took on. I can't remember what it was. Something happened in 1998. Was that long-term capital management? I forgot. And everybody and their mom were panicking. It was, I mean, but now it's just like, huh? I remember in 2010 or 11 with the Dubai debt crisis. Everyone and their mom were panicking. I was like, huh? Like Dubai debt? I don't even know where the hell Dubai is. It's crazy. I was like, stop. Doesn't make any sense. If you got no debt, you got cash, you're gonna be okay. It's just that simple. That doesn't mean you're gonna be living large. I doubt anyone here lives large to begin with. All right. Could the stock market volatility be caused by more puts and calls on stocks? Gambling? I don't know. I don't know, Marie. But again, this is just chump stuff here. Come back to me when we're down 57% top to bottom. I'll 2007 March, October 2007 to March 9th of 2009. Then we can talk. Right now, this is literally nothing. It's no big deal. We are maxing our Ross every year. This is still good strategy. Sure. I mean, why would it not be, Brad? I mean, was it a good strategy at 57? Why would it not be now? I literally don't understand. If it's a good strategy last year, why would it not be now? Because the markets are down? I can't compute that. Here's Jeff B. World's not falling apart. Two mortgage brokers are chatting, and the bar says, an honest woman is a good investment. Oh, the other replies, true, but a woman with no principle gets a lot of interest. Hey, oh boy. Yeah. Have to go back to the minor leagues there. Come on. Oh boy. The correction is part of the business, and every business cycle has it. That's every single business cycle. Yep. Could not agree more, man. Yeah, Janus funds. You remember that? Yes, right, James. Janus funds. I remember that too. And they had forehand funds or something like that. I remember that as well. Janus funds, forehand funds. There's actually an internet fund. Man. And then they all lost their jobs, 100%. Yeah. Yeah. Oh, 100%. Denise said, and if you ever want me to share what your circumstance was, Denise, I'll be happy to do that. But she said how a blessing mashed potatoes would be. Mashed potatoes. Denise wasn't worried about a market turmoil. She's worried about mashed potatoes. So let's put things in perspective, my friends. Well, Brad's back. Is Brad gonna be let's see what Brad's got to say this time. Last week Brad was a curmudgeon, to say the least. Grumpy Brad. Brad was saying, no one can afford anything. Let's see. Brad's down here, and let's see what it says. Curmudgeon. It's always good to have a curmudgeon, but we don't want too many of them. Yeah, I couldn't agree more. Kirk says, the only thing I ever stress about is God. Am I making you proud? Yeah, 100%. I tell you, man, I just think about. It's funny as I was getting more and more. I say right with God because I'll never be right with God, but just get more and more recognizing you, how vast God is. Unlike the box that I never really thought he was in a box. I didn't mean like that, but man, it just is. That's why I really fired. And that's why you get this book, rethinking, inventing the flat Earth, Columbus and modern historians. Again, how they just attributed to Christians things they did not say to make Christians look like fools. In fact, I think Augustine. I think he's got a great quote in here in Augustine. Let's see. Oh man. Uh, let's see if I can't find it. Oh, right here. So basically, in the literal, in Augustine's literal meaning of Genesis, Augustine observes that the Bible contains no clear description of the physical shape of the size or the size of the earth or universe. So basically, because Augustine says the Bible doesn't say either way, and Augustine he doesn't care. He's like, I don't care. But because he said that, they're trying to the secularists are trying to attribute to Augustine that he's a flat earther. He's like, no. And then he says, this is Augustine. Accordingly, he warns Christians not to make fools of themselves by snatching isolated texts from the scriptures and using them against the pagan philosophers. Fools who ascribe their only silly views to the Bible will only make pagans contemptuous of Christians and their scripture. Since the Bible does not tell us the shape of the earth, it is irrelevant to our salvation, and discussing it is idle. And so basically, they're going to use that. So, oh, Augustine, you must be a flat earther. It's like, no, I don't care. My salvation is what's important. But Augustine was written 300 AD, by the way. And I mean, telling you, just read these guys. These guys are snakes in the grass, man. Snakes in the grass. No different than green dealers today. Snakes in the grass. All right. Human husband, husband, man. Oh God Almighty, they've been saying this based on the CAPE ratio forever. Doesn't mean they won't be right at some point. They've been saying, I mean, they were saying that back in 2010 and 11. The valuations were too high relative to historical norms. Oh, and I'm just sitting there thinking, there's so many things that are wrong with that argument. I've gone over a million single times, a million times. I got $1 to invest. Now I can get basically a 3% 10-year Treasury bond, which is a hell of a lot better than I could, eight months ago. But still only 3%, man. That's it, and that's locked in. Or I can invest in a stock market that's actually, down 15%. We'll just say on average, and earnings are growing, hopefully, and they pay a dividend as well. And it's compounding, where bonds don't compound. Bonds are fixed, simple interest. That's all you get. And I don't need the money for 10 years. So I say, okay, I have these two options. Or I can invest in real estate. Well, real estate ain't cheap either. So it's the same old story. The same old story. Like, okay. I didn't do a video on this. I wanted to do a video on. Hold on just a second. I thought this was very interesting, actually. Let's see if I can still find it. I'm getting old, man. Ah, shoot. I'm not going to find it off the top of my head. It was one second. It was about the U.S. corporate debt relative to I can't find it. The corporate debt wasn't anywhere near what I think a lot of people are thinking about. We're all in debt. We're all going to die from debt. It was like, that's not that great. It's just not. I mean, I wish there were less. I wish I had less, but it just wasn't that great in terms of the panic that's ensued. I just thought it was interesting. So, point being is Husman. I mean, all these guys perma bears, and I don't like. I don't. It doesn't matter. A perma bear is right at some point, but okay. I mean, I got no qualm saying, yeah, overall negative SPX total return based on current valuations. You know what else said that? GMO. Jeremy Grantham over at GMO. They've been saying that for 15 years now, and they were wrong. Doesn't mean they can't be right, but it's just like we just went through a decade, last decade before this past one, where we had 0% returns for the S&P 500. I just don't see the likelihood of that happening again. I mean, it could. Again, my expectations are 6% or so on stocks, roughly 2% on bonds. If that were to change, I'll change it, but I'm very comfortable with that. Why? Dividends are 2%, maybe 2.5, 2 to 2.5, depending on what you got. Earnings growth year over year, 4 to 4.5%. Add those two together, there you go. Keep it simple, stupid. God is good always, man. No, why would is buying physical silver a waste? No, of course you want physical silver. Absolutely. Yeah, rainy days will come. Relax and ride it out. You need rain to grow your plants, people. You need rain. All right. Yes. If we have an economic collapse, huh? Chill. If we have an economic collapse, we're certainly going to have a stock market collapse. Yeah. And who knew who Peter Lynch was in 1978? No one did. Oh boy. I sold my Wellesley fund after I realized I could do better. You could do better. All right, we'll see. Uh, okay, but that's not okay. Gotcha. Well, we'll see. Look, that's fine. You got to do what you got to do with your money. I just find it you could do better. Exactly. You could. We don't know. But if you want to be more in control, you should. Absolutely. I got no qualm with that at all. No, we don't know this. So we'll go back over time. We simply don't know. We have no idea. I just want to be. I know a lot of people say that. I did a video just 2 days ago, again about it hasn't gone back in Japan, hasn't gone back up relative to 1990. So don't get too caught up, and it will always go back. We don't know that. Yeah, that exactly. No competition. Yeah, 100%. Okay. Oh boy, this guy's got to be fun to hang out with Thanksgiving. Political, social, economic coup of America and globalist take over the world. Dude, they took over the world. Not the Rockefellers, probably before that. Oh boy. All right. Come on. Yeah, exactly. 100%. 100%. Boss man. Yep, 100%. So take some money, take some of your winnings and put it aside. Your gains. Exactly right, boss man. Do I think the recent fires of oh yes, I knew it. US food warehouses. Oh, a coincidence? I don't know. But I mean, but what can you do about it? We don't know. But what can you do about it? You can fret, or you can say, oh, I got my cash, I got no debt, I got some emergency preps. I mean, that's literally all I can do. There's literally nothing else to do, and worrying about it doesn't do anybody any good because there's literally you cannot do anything about this. Pray. Yeah, I got no qualm with that. What do I think about the 2060 target date fund and the 401k? I love it, man. And total stock in a Roth, 100%, man. All right, my friends, I think get ready to get out of here. Midwest stills. Exactly. Ooh, buy beef jerky. There you go. Saw a rancher interview on at the high wire. Says rancher being asked to euthanize cattle by feds. Did you see the comments made by Buffett at an annual meeting? Love those cantankerous guys. Told disdain for Robinhood Bitcoin. Yeah, I did see that, man. I don't love Buffett and Munger. They're way too fond of left wing causes, but I'm not afraid that that they're not afraid to take on some issues like that. That was good to see. 100M was 100,000 watching Trump on YouTube. Oh, cool, good. Oh yeah, 100%. We don't have elected officials. Oh boy, I think Squid's. Oh man, but yeah, I saw that Biden was laughing up the left wing mainstream media. Yep, he thought their jokes. It was so funny, man. Absolutely. Absolutely. Biden's just laughing. Hey, who's that? My man HB. Oh, thanks, HB. You're a good man. I don't care what they say. I saw that. I saw they gave him a standing ovation to Biden at the that correspondence thing. Just look, man. The whole DC thing is corrupt as all can be. Right? Oh man, I'm rooting for collapse as well. America needs to face some repercussions for the. We got on here. We got some naysayers. Good time to do when the market's down. It's always a good time. I won't say always because people say you said it's always a good time if it's right for you. But I don't know. I don't know. But just you certainly. I like doing Roth conversions when the markets are down. Unlike last year. Yeah, right here. Weather other ground. There you go. Was mostly peaceful terrorist group. Exactly. All right. I can get out of here, my friends. Appreciate you guys. Good stuff. And again, I do appreciate your comments and being here. And HB, give me 10 schmackies. It's all good. Look, stop being so not Bill Ayers, but listening. I don't get it. It's just why you live in the greatest country that the world has ever seen. Why? And there's not. It's going to happen regardless of what you do about it. So the only thing you do is just get your mind prepared. Get right with the God. Have some preps. Have some cash and have your debt paid. There's nothing else to do. What else can you do, man? I mean, if you want to write a letter to your congressman, that's fine. You certainly vote for your state legislatures and stuff. But at the end of the day, we know what happened to the election. My vote counted. I'm in Fulton County, Georgia, so let you think that. But it's just like, what else are you going to do? I mean, I don't know. And I mean, so just you say America has been through a hell of a lot worse than this. We had a freaking civil war, for heaven's sake. We had people who could not vote in this country. We had we rounded up American Indians. America's with scars and everything. It hasn't been peaches and cream. It just hasn't. The last 40 years, 30 of them have been pretty good. I grant you. But the aughts were bad. Because of the way they set things up with ninja loans and all that stuff financially. But hasn't been. I mean, America's had some tough times, and enjoy while we can, because it's not always going to be like this. But it doesn't even matter because there's nothing you can do. I don't know. I just say get on your knees and pray for guidance and pray for God to say, look, I'm here. That's all that matters. Only thing that matters is this right here. Nothing else matters. But literally, nothing else matters. And no matter what you do or think, it doesn't matter, man. What matters is, are you at one with the Lord? And if you are, it's all peaches. And just read Lazarus Laughed. It's a PDF you can get on the internet for free. Lazarus Laughed. And if you read that, when Lazarus comes back from the dead, he's laughing, and people are like, well, Lazarus, how can he be so happy? He goes, because I see what's on the other side. And it's all good. All right. God bless. We'll see you guys.